This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. I'm Cesar Delgado. The grains markets are looking for a situation where we have some uncertainty with nitrogen cost and fuel costs. It's pretty uncertainty within the grains sector for right now. Now he's joining us on today from Terrain Ag is Marc Rosebonm. Marc is the senior grains analyst for Terrain Ag. The fundamentals on the beans markets for this meeting on May include the cost of inputs and demand for the beans to China. He is joining me now as Chip Neilger from Blue Reef Agri Markets in Morton, Illinois. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. The grains markets are looking for a situation where we have some uncertainty with nitrogen cost and fuel costs. It's pretty uncertainty within the grains sector for right now. Now he's joining us on today from Terrain Ag is Marc Rosebonm. Marc is the senior grains analyst for Terrain Ag. Hi Marc, how are you and welcome to the show.
Hi, Caesar. I'm great. It's a great day in mid-Missouri. Happy to be joining you today.
Marc, let's talk about the situation of nitrogen cost for corn farmers in the Midwest like in Iowa and Illinois. How do we see some of concerns about break even? It's been challenging without having uncertainty for the future.
Absolutely. I think you make a good point there on the uncertainty side. So projected operating margins are one of the things I track pretty closely. And this year, I think we expect, or I do expect, us to see a wider range of outcomes than maybe we've seen in the past. Even following the beginning of the Iran war, we've seen that margin be pretty volatile. Shifting $10 or so, even in a day or even just a few days. For those that purchased some, or in a best case all, of their inputs over the say fall time period, October to December, operating margins for those folks are back about to the 33rd percentile on an inflation adjusted basis. Um, Over the long run, comparing that to the 2005 to 2024 time period. And so those folks that made, in hindsight, the best choice are in a bit better position, while at the same time, folks that are maybe buying some or all inputs, at any given point between say when the Iran war started and now, that margin has been very volatile. Sometimes better than pre-war, sometimes worse than pre-war, and so for all of those reasons, I think we're going to see a pretty wide range of operating returns and even net returns for the corn side in particular this year. The nitrogen prices you mentioned in particular, kind of the whole nitrogen complex has followed urea. But if I had to pick one kind of piece of optimism, maybe for 27, at least the futures curve indicates maybe the potential for better pricing come fall. But I would note that a lot of that depends on the war, how long that lasts, what the damage is, and how quickly we can get things back to normal. Fuel prices also included. Futures indicate those may come down a little bit by fall, but if we see a prolonged war, those fall prices could rise also, and that decline we could push out another month or another few months.
Are you concerned about input costs for this year with the grains market?
Yeah, input costs are definitely going to be a challenge for some folks. I think the same thing or similar things that we've heard from farm credit customers that we deal with, or the lenders that deal with those farm credit customers, is that a lot of the folks here in the upper Midwest had purchased a good portion at least of fertilizer, maybe not all of it, and at least some fuel, maybe pre-war or about time the war began. And that's largely consistent, I think, with what the American Farm Bureau fertilizer survey found for this region as well.
What is your thought on the fundamentals on the beans market with these geopolitical right now, like with the meeting on China and war? What does it take some concerns in the marketplace?
Yeah, there's a lot of interesting things going on in the fundamentals of the soybean side at the moment. We're looking at very strong biofuel demand this year and next year, both domestically and given where energy prices are at the moment globally, which is good for soybean demand. Broadly, I think other countries are still looking at expanding inclusion rates or mandates. And given where biodiesel prices are relative to petroleum diesel prices, I think we're competitive on a market basis in some of those places also, which means support for soybean oil and vegetable oil sector on total, and that backs up into crush demand and influences the soybean markets. We did finally have the Trump-Xi meeting last week, I guess second one, really. And the market was looking for answers right away. And I think was a bit disappointed on Friday and consequently sold off commodity markets more broadly on Friday. It took a weekend announcement to get the markets back on its feet and going Monday, but we did get maybe not a full recovery, but a partial recovery in those prices. And so we got purchase commitments, we think at least, maybe less directly confirmed by China, but at least from based on the statements from the White House, we got purchase commitments above the prior soybean commitments. And by my math, I think we're looking at roughly 30 billion, give or take, of ag-related trade by the time we prorate the 17 billion for this year, and probably count part of the 12 million tons from last fall, the agreement last fall, and the 25 million committed for calendar year 26. And then we get fewer soybeans in value terms. So when I'm thinking about trade in total dollars, and more non-soybean and other ag products in 2027 and 2028.
Is there any final thoughts about the fundamentals with the corn markets for this year?
Yeah, similar to soybeans, I think there's a couple important things going on. Higher gasoline prices make and higher ethanol prices are making ethanol margins look pretty good at the moment. Again, with where corn prices and relative to ethanol prices, where that is, we saw a pretty, well, I think it's a pretty quick spring maintenance period in the weekly ethanol production data. And I think that was at least in part to get some extra runtime in to capture some of these favorable margins out through spring. Even when I look at winter margins, I don't think they were negative like they are in some years. And going out, the rest of the spring or rest of summer, we're looking in the probably 20, 25, 30 cent range, depending on the day and what local basis and other things are. And so those margins are pretty good. And I expect corn grind for ethanol to hold up because of that. Globally, when we look at the USDA balance sheet at face value, I think it supports U.S. exports in the year ahead for sure. And that's even before considering area or yield risk in a variety of foreign countries, which in our opinion could further support prices if we see production shortfalls um, in South America in particular, but even out of the Black Sea. With where current prices are, futures prices are, I think that implies something like a $4.60 to $4.70, somewhere in that range, season average price by my calculations, and that compares to a $4.40 WASD cash price, average cash price received. And so we've been encouraging folks when we've been giving out looks to farm credit customers to maybe consider whether their price floors or some similar strategies might make sense for them to protect at least a portion of their downside price risk out there that could be out there from either higher area or maybe another year of good yields, or in maybe a less expected case, weaker demand.
Thanks, Mark. I enjoyed our conversation for today.
Thanks for having me. I enjoyed being on.
This is Marc Rosebonm from Terrain on Back Roads of Illinois. Do you have more information about the grains markets? You go to terrainag.com. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. The fundamentals on the beans markets for this meeting on May include the cost of inputs and demand for the beans to China. He is joining me now as Chip Neilger from Blue Reef Agri Markets in Morton, Illinois. Hey Chip, how are you?
Good, Caesar. I'm doing good. Thanks for having me on.
The beans markets are looking for this meeting with China for right now. What is your position on the fundamentals from the beans markets?
Yeah, we had a wild ride, a roller coaster of events here. If you go back a week ago, almost exactly a week ago, President Trump's meeting with President Xi in China. Initially, we thought there was nothing there. Markets sold off hard into last weekend, and then on Sunday, this past weekend, we get the announcement from the White House that yes, there is a trade agreement. It includes the 25 million bushels of beans initially talked about, as well as another $17 billion worth of ag products, and the market shot higher off of that news. So we still don't have confirmation of that. China has not said, yes, we do agree that there's a trade agreement. We don't have any official purchases from China, but it does look like that, at least from our stance in Washington, that there was progress made. There is a trade deal. They will be purchasing beans and other ag products going forward. And now we're kind of pushed and pulled by the crude oil and energy markets, as it looks now like there is a pathway to a peace agreement with Iran. Crude oil is selling off right now. This is about the sixth go round on peace, no peace, peace, no peace. And so it's really a volatile ride. At the heart of the matter, bean fundamentals, the balance sheet is going to be pretty tight. We need to raise a big crop, and we need to see what, and I guess assume that there's still going to be a large amount of demand, especially from China going forward. And if that's the case, we need to raise a 53 bushel bean crop, which is a big crop here, or we're going to cut the carryout well under 300 million bushels and keep the carryout very, very tight. So very interesting scenario we've got brewing here for the next few months, Caesar.
Do you have any final word? What is the technicals buying in the beans markets for the November beans?
Yeah, we're kind of stuck in the middle of the range here. We get up north of $12. It uncovers some selling pressure. We get down into the 1170s and below. It uncovers some buying. And so for the time being, it looks like we're going to see some really sloppy trade here until we get a little more clarity on, what China is going to buy, when they're going to buy, and a little deeper in the growing season, it's probably going to be very choppy, volatile trade that we see, where rallies don't follow through to the upside, sell-offs don't follow through to the downside, and we remain very sloppy with our trade action here.
What is your thoughts on the corn acreage? Because we could see more beans acre. However, inputs cost are up. What is your thoughts?
Yeah, I thought even from the March acreage report there at the end of March that they were a little bit too high on corn acreage, and we could see some shifting to bean acreage just because of costs and input costs and the financial aspect. Got kind of wet late in a lot of areas. Maybe that shifted a few, but I think the corn acres could come down a little bit. Bean acres could grow. And then now with the assumption here, it wasn't laid out specifically, but there's some assumption in the marketplace that China, as part of this trade deal, could be in for some amount of U.S. corn purchases going forward. And we already have record high demand. And so it keeps the floor underneath the corn market for the foreseeable future.
Do you have any concerns about the fertilizer dilemma with the war in Iran?
Yeah, I think that there's maybe not so much here in the United States. I think that most of that product was in the country prior to the war. But I think going into winter, fall and winter, it's a different story. Now, if we can get a peace agreement and the straits opened up immediately, like in the next 2 weeks, we should be okay. But if it goes much longer than that, you really are going to start pushing the window to get fertilizer into South America and maybe even here for the fall time frame. So I think it's we're right at that period where it's going to get a little dicey here going forward from that fertilizer and nitrogen standpoint, especially for South America if this Strait of Hormuz stays closed for another 6 or 8 weeks, and that would probably get past the point where it's going to really, without question, affect South America. But pretty dicey situation right now.
Could you tell us about the outlook for the June acreage report for next couple weeks on these markets?
Yeah, that'll be here before you know it. The end of June, we've got the acreage report. Historically, that's always been the final acreage report. But in the last couple of years, we've seen some big revisions on the final January report too. So like we talked earlier, I would think that there's some room for bean acres to come down just a little bit. I should say up a little bit, corn acres down a little bit. Between now and then, though, in this environment with China, with the Iran situation, be plenty of news that churns these markets up between now and then by that time, we'll also get a little better sense for what the weather's doing. Is it hot and dry anywhere? How is crop conditions coming along? Are there any hot spots developing with production risk anywhere in the Corn Belt? So a lot of information to hit these markets in the next 5 or 6 weeks.
How is the fundamentals on the deferred contract?
Yeah, longer term, it's really strange. I mean, maybe not strange is the word, but most of the strength is in the nearby. The deferred cattle are sharply discounted. So there is an expectation going forward that we do kind of put a normal seasonal top in the beef market this time of year, sell off into June, July. That's kind of digested, it looks like, in the deferreds. They're still at pretty high levels, and I think the market knows that the numbers are still going to remain tight for the foreseeable future. We're just not rebuilding the cattle herd at all here. So that makes it even more difficult to kind of project and predict this thing because, for example, October cattle are $19 under where the June contract's trading. So there is some amount of discount and lower expectations out that far. And so, we'll have to see. I think it depends on how the market handles the cash market. Whether we get any beef, U.S. beef going into China on any potential trade deal we got going on here, how domestic demand holds together with some of these higher energy prices. It could get interesting out there, but there is some expectation built in for a little dip in prices here just because the deferreds are quite a bit discounted to where we're at in the nearby. That's not uncommon this time of year, but makes it more difficult to try to gauge where any setback could find support.
Do you have any final word on this corn markets for fundamentals with the acreage report for next couple weeks?
Well, the fundamentals are going to matter. Weather and production are going to matter, but probably, unfortunately, just as important are going to be what's going to happen with the U.S.-Iran war in the short run. Will we get some stuff flowing out of the Strait of Hormuz? And are we going to get any confirmation of actual purchases from China? That's going to probably trump what the crop looks like and what the yield prospects are. I think we do start taking more notice of that as we get out into late June, first half of July, as far as what weather's happening, how's the crop look. But in between now and say late June, I think it's going to be more about, where's crude oil go? What's the war situation? And do we ever find any confirmation out of China of this trade agreement and actual purchases? And that will really drive prices one way or the other. Whether China buys or doesn't buy will dictate a big part of the volatility between now and the end of June.
This is Chip. Thanks, Chip. I enjoyed our conversation.
I do too, always, Caesar. Thanks for having me on.
This is Chip Neilger from Blue Reef Agri Markets on Back Roads of Illinois.